Question is now is there more room to run for the shares? Let's get to Seema Modi this morning, talk about what the street is saying, as well as what Oracle said earlier in the week and some of the action in semis today, Seema.
Yeah, Carl, Jensen Huang's comments lifting NVIDIA's market cap by over $200 billion yesterday. That is the fourth largest single-day increase for any company in history. That is certainly inviting street reaction this morning. Bernstein naming NVIDIA a top pick, writing that clients that Blackwell delays seem to be mostly a nothing burger. Margin worries are overblown. Their price target is $155 a share. Morgan Stanley's equity strategy team, using fundamental and quantitative analysis, adding NVIDIA to its list of names to hold for the next 12 months. They say if you want exposure to AI, you can't not hold NVIDIA. They think Blackwell availability later this year should further cement its competitive position. The big question investors are now trying to answer is whether yesterday's move was indicative of a sustainable rally. Mizuho is more cautious, writing that flows into tech yesterday were solid, but they did not suggest a wave of active buyers nor a rush to get long or semi names. They actually said there's some characteristics of a short squeeze. We are seeing NVIDIA shares up another 2%, guys.
This year, NVIDIA and Meta platforms have skyrocketed. However, these businesses stand to gain from significant developments in digital advertising and data center investment, which may propel their stock values to all-time highs by 2025. Compared to Wall Street's 2025 earnings expectations, these stocks trade at relatively low forward price-to-earnings, P/E, ratios, which may pave the way for another explosive run by investors the following year. This is what these stocks have to offer. As data centers switch from traditional computing to accelerated computing systems to tackle artificial intelligence, AI, workloads, NVIDIA continues to claim amazing growth. The company's stock has increased 161% in the past year due to the unprecedented demand for its graphics processing units, GPUs. With Wall Street projecting 40% earnings growth next year and 36% over the next few years, the stock's forward P/E of 28 is too low based on earnings growth in the following year. At the moment, the stock has a trailing 12-month earnings P/E of 53. The share price of NVIDIA may rise above $200 if it continues to fulfill the earnings expectation for the upcoming year and the stock remains at the same trailing P/E. Over the past month, the stock has declined due to worries about NVIDIA's upcoming Blackwell computing platform's delay. Yet demand patterns appear to be quite positive. The management anticipates that Blackwell will start to bring in money in the fourth quarter, which will increase demand for its current generation chip. Crucially, management indicated that a range of workloads were fueling its data center business's expansion. Along with developing cutting-edge AI models, customers are purchasing its hardware for inferencing and training generative AI models. Consumer internet services and the thousands of startups developing AI applications for the advertising, healthcare, and educational sectors are driving demand. Before the stock doubled in 2024, NVIDIA's price per share, P/E, was comparable in December. Given its current value, it has a chance to beat Blackwell and repeat that performance. If you want to keep up with NVIDIA's latest updates and keep up with the stock market latest news, you can subscribe to our investing tutorial channel as we post daily updates about the biggest changes and catalysts in the market. So click the subscribe button if you don't want to miss the newest market updates. Now back to today's video.
My favorite three, Scott, in the Mag 7 right now are Apple going into the iPhone upgrade cycle this fall. Then Meta, because they're at all-time highs. They're really the first poster child of somebody who's making money hand over fist from AI. And then, of course, NVIDIA, the godfather. But after that, it's Amazon. And I did sell out of it in July, but it's darn cheap on a 5-year basis. It's like trading at all-time lows on a forward PE basis. Nothing really was wrong with the quarter that they just reported a couple of weeks ago. So I think they are definitely one that's on my radar, and I plan on adding probably in a few weeks as we start to get closer to the next tech earnings season.
Well, we can't get to the next tech earnings season before we get out of this one, and we still have to consider NVIDIA a week from today. How do you see that?
I mean, it's huge, obviously. It's the most important stock in the world right now. So, if they laid an egg, it would be a major problem for the whole market. I don't think they will. I think they're going to surprise to the upside. If you look ahead at sort of what Wall Street is counting on a go-forward basis, it's almost like this explosion of AI revenue that they've seen over the last year and a half, is going to just sort of dry up. And I just don't think that's the case. Eric Schmidt gave a talk at Stanford recently. It was sort of leaked a few days ago, and they took it down off of YouTube because he made some critical comments about the work culture of Google. But embedded within that talk, one of his throwaway lines was, in talking to Sam Altman, they said that together they both believe that each of the hyperscalers, plus the OpenAIs of the world, we're probably going to have to spend something like $300 billion in NVIDIA chips over the next few years, each, $300 billion each. So, NVIDIA could basically only supply those hyperscalers, and their order book is going to be full for the next 4 years. It's a massive, staggering amount of money that's sitting in front of them. And, God love the Broadcoms and the AMDs of the world, but, the vast majority, like more than 95% of that revenue is going to go to NVIDIA.
The cloud computing services division of Alibaba Group Holdings and semiconductor giant Nvidia are working together on an artificial intelligence AI project that will help Chinese manufacturers improve the autonomous driving experience for owners of smart vehicles. Alibaba Cloud, the e-commerce giant's digital technology backbone, announced this partnership on Friday at the Apsara conference, which runs through Saturday. At the conference, Alibaba unveiled a large multimodal model, LMM, solution for automotive applications that it co-developed with NVIDIA and startup Bama Network Technology, Alibaba's intelligent cockpit solution provider. Hangzhou centered the Qwen portfolio of large language models, LLMs, from Alibaba Cloud, which includes Qwen 2VL and Qwen 27B, has been integrated with NVIDIA's Drive AGX Orin platform for smart cars. The generative AI services like ChatGPT are powered by LMs. Large AI models from Alibaba Cloud have now been integrated for the first time into NVIDIA's Drive automotive platform, which is being used by several of China's leading EV manufacturers such as Li Auto, Great Wall Motors, Geely Auto's Zeekr Intelligent Technology, and Xiaomi's EV division to power their upcoming fleets. Alibaba Cloud's AI models are now completing complicated tasks in real time with much lower computing costs and latency thanks to NVIDIA's model acceleration technology. According to Alibaba Cloud, this guarantees a seamless and continuous intelligent experience for both drivers and passengers. Joe Jingren, Chief Technology Officer of Alibaba Cloud, stated during the event that the company wants to enable more companies and individuals to realize the promise of generative AI in collaboration with our partners. The new LMN solution will allow in-car voice assistants to have dynamic, multi-turn conversations because of Qwen's advanced capabilities in addressing complex inquiries and processing visual information, according to Alibaba Cloud. Additionally, these aids will be able to make suggestions. These might be anything from warning drivers to turn on their headlights in particular situations to giving them information about landmarks in the area. Based in Santa Clara, California during the conference, NVIDIA Global Vice President He Tao stated that the company was collaborating with Alibaba Cloud on infrastructure to accommodate the increasing need for computing power among people. The Forum was organized by the U.S. company. According to NVIDIA, accelerated computing initiatives that leverage parallel processing to speed up work and improve energy efficiency across demanding applications are being pursued by Alibaba Cloud and NVIDIA. Furthermore, the two businesses are collaborating to develop tailored solutions that will assist traditional enterprises with migrating their LLM operations to the cloud. Similar to energy from a power grid, cloud computing technology allows businesses to manage or distribute a variety of software and other digital resources over the internet as an on-demand service. Data centers are where these resources are kept. Via its generative AI platform Model Studio, Alibaba Cloud claimed on Friday that more than 300,000 users have been drawn to its proprietary foundational model Tangi. This is a significant increase from the 90,000 users that were disclosed in May, So what does this really mean for Nvidia's stock? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
I mean, obviously, the money that NVIDIA makes is the money that the hyperscalers are spending. So at what point do you look at what the hyperscalers are spending and say, you know what? It might be a little longer for the ROI or the return on invested capital side of the story than I think we're willing to admit. How should we look at that?
Well, I think that the Meta is showing now that they are making a lot of money from this, and that's why their stock is mid 500s right now. So they, I'm starting to think that Zuckerberg was sort of leading us on several years ago when he was saying that he was spending all this money on Reality Labs, and people panicked and sold the stock down to $80. I kind of think he was trying to throw off his competitors by just spending all this money on NVIDIA GPUs so he could get a head start of them. So he's showing the way. Now, if you're sitting in the seat of Andy Jassy, or Microsoft or OpenAI, are you going to let another one of these competitors just take the lead and become the dominant player in AI going forward? I just don't think you can do that. And you're only spending a minority in some cases, or just certainly less than your annual free cash flow that these companies are generating. So you're not going to spend that money just like leaving it on the balance sheet, and you're not going to spend it on M&A because Lina Khan's not going to have anything to do with that. So I think it was Eric Schmidt in that same talk that said, a lot of these people look at the investment in AI as like, what's the return on investment on intelligence? Like, they see it as, a lot of them, infinite. I mean, there are going to be some shocking applications that are going to come out over these next 2 years. I've seen some already that just make the hair stand on the back of my neck, Scott. So I know everybody's impatient to see the applications, but they are here in some cases, and they will be coming shortly. We're still less than 2 years away from ChatGPT's debut.
I got you.
A group of specialists from prestigious research institutions and medical centers in the United States is using federated learning enabled by NVIDIA to assess how well AI-assisted annotation and federated learning work together to train AI models for tumor segmentation. Federated learning is a technique for building more accurate, widely applicable AI models that are trained on data from multiple data sources without jeopardizing data security or privacy. It enables cooperation between multiple enterprises on the creation of an AI model without allowing sensitive data to ever leave their systems. It's getting more and harder to share data across websites and compile it in one location due to privacy and data management restrictions. And picturing research institutes cannot establish data sharing agreements as quickly as AI is advancing. According to John Garrett, an associate professor of radiology at the University of Wisconsin-Madison, the only feasible approach to stay ahead is to use federated learning to create and test models at numerous sites simultaneously. It's a very useful tool. Garrett is a member of the Machine Learning Tools and Research Subcommittee of the Society for Imaging Informatics and Medicine, SIIM, a community of physicians, scientists, and engineers working to promote the creation and use of artificial intelligence, AI, in medical imaging. Since 2019, NVIDIA, a SIIM member, has worked with the Committee on Federated Learning projects. According to committee head Khalid Yunus, federated learning approaches provide for improved data privacy and security in line with privacy rules like GDPR, HIPAA, and others. Furthermore, we observe enhanced generalization and accuracy of the model. NVIDIA Flare, is an open-source framework with strong security features, cutting-edge privacy protection techniques, and a flexible system architecture. The team, which includes collaborators from Case Western, Georgetown University, the Mayo Clinic, the University of California, San Diego, the University of Florida, and Vanderbilt University, used it to support their most recent project. The committee was given 4 nvda RTX at 5,000 GPUs through the NVIDIA Academic Grant Program. and these were dispersed among the collaborating research institutes so that they could configure their workstations for federated learning. Additional partners demonstrated the adaptability of nvda layer by utilizing NVIDIA GPUs in on-premises servers and cloud environments, breaking federated learning's code for the initiative, which focused on renal cell carcinoma, a kind of kidney cancer. Data from about 50 medical imaging investigations were submitted by each of the 6 collaborating medical institutes. The team experimented with model topologies and hyperparameters to optimize for training speed, accuracy, and the number of imaging tests required to train the model to the necessary level of precision. The model's training set was manually labeled during the project's initial phase. The team's next step is utilizing nvda for eye-assisted annotation to assess the performance of the model with training data segmented using AI's conventional annotation techniques. The team intends to release their methods, pre-trained model, and annotated datasets after the project is finished in order to facilitate further research.